Ladies and gentlemen, Matthews here from MD Forex Traders. I hope you're doing great. I'm here with a trade recap on what happened on Cadjpy and AUDJPY. So for that and more, watch the rest of the video. All right. So let me just do the breakdown for you guys so that you see what happened on this particular trade right here. So you're going to agree with me right here that this market has been to the downside for a long time, right? So what we did was we came here on the 1 hour time frame, and then I saw this beautiful setup right here on the 30 minutes time frame. Okay, you're going to realize that we had a nice rally based drop supply zone with equal highs right here, and these equal highs were taken out by that nice candle right there, giving us an entry signal right here on the 50 minutes time frame. And guess what, we did enter this particular trade and the market pushed to the upside and we were taken out, right? Looking at this setup right here, it's a beautiful setup right here. Look at the big momentum candles to the downside. That's confluence right there, breaking structure, finding our other block on top right there, liquidity here, giving us all the right confirmations, and we actually able to send this signal right here to our private community. Here you can clearly see it was here. However, this trade failed to work out. The other trade was AUD JPY right here, happening at different time frames. These weren't happening at the same time. They were happening at different times right there. So same with the other one right here. If you go to the 1 hour time frame, you're going to realize that we had this was a perfect setup. Look at the big momentum candles that broke structure right here. These are a must. Whenever you get these kind of candles right here, I know I have a solid setup, right? Therefore, I have to take this trade. And guess what? This is a nice rally based drop supply zone. The market coming to us in the form of a compression, coming into our zone right here. And if you can drop to the lower time frame, you're going to see the market actually reacted from here. We had a nice pin bar right there, which was formed on the lower time frame. Then we jumped in right here, and the signal was sent on this particular trade right here. And guess what? This trade still went to the upside, and we were taken out. I think there was also another trade that we took. It was must have been a NZD right here. Today we have been obliterated by the JPY pairs. You can see as well that this was an absolutely amazing trade. However, the same thing happened. Mind you, these were taken at different times. They were not taken at the same time. So you can clearly see that after the market came to our level right there, we saw the market being rejected from that level right there, going a little bit in our direction, and we saw the market continuing to push to the upside, and we were taken out. First, the NZDJPY trade was a 5 pip stop loss and the 170 pip target, which was a 1 to 33 risk reward ratio, and we lost on this one. AUD JPY was a 1 to 24 risk reward ratio, 8 pip stop loss, and 200 pip target. We lost this one. And Cadjpy, which was a 33 risk reward ratio trade, 200 pips target, and 6 pips stop loss, and still failed. Imagine having those series of trades in a row going into losses. What can you do, right? So as a trader, like we always say, the market works in terms of probability. There is no one out there who knows with 100% certainty what's going to happen. Therefore, if you know you have a strategy, you have an edge that has been back tested and forward tested, and that edge has proven to be profitable over time, you are obligated to take all trade setups that meet your criteria. You are you are supposed to take all setups that meet your criteria. Hence, I continued to take the same setup even if it actually the previous one failed, because I don't know which trade is actually going to go in my direction. I have no idea. So I'm obligated to take all setups that meet the criteria. This right here, the losses, is what most people don't talk about. Why? Because the losses don't sell. People don't like talking about losses because losses don't get them business, right? So here we try to be as transparent as possible because we understand that this is part of the game. Losing is so much an integral part of this game, just as winning. So you're going to lose in this market, right? So you have to be able to handle those losses. How do you handle those losses? You have to make sure that you have a long-term mindset. Okay, have a long-term mindset where you're looking at a series of trades, and then also make sure that you are predefining your risk every time, because you understand that anything can happen. All right, and you have to take all setups that meet your criteria. The moment you fail to take the next trade which meets your criteria, that might be the trade that actually was supposed to have made you money, and you'd have missed out because you got scared. Why would you get scared if you know that if you continue to take those trades, they're going to make you profitable? There's no need. You're going to realize that that fear is actually irrational. So you are obligated to take all setups that meet your criteria, regardless of the outcome of the previous trade. I know it's going to be hard, all right? It's going to be hard psychologically to deal with losses. Very, very hard. I mean, like, there's you never get used to that. All right, so no wonder you're supposed to keep on working on your psychology, because you have to continuously to rewire. You have to rewire your mind continuously so that you're able to handle those emotions, so that you don't revenge trade. All right, it's extremely important. Otherwise, you end up using emotions to revenge trade, and lose so much more money on that particular trade, and which means that you'd have wasted all those wins that you would have actually made from the previous wins. Remember, these are small uh, losses right here in comparison to the wins that we actually make. So you can see here, this is a 1 to 33 risk reward ratio. Just yesterday we took a trade on I think I made a video about this one. We took a trade on yeah, we caught the nice trade on we caught all this yesterday. It was almost like a almost 280 pips on Nasdaq yesterday. If you haven't watched the video, check it out. That trade was the 1 to 28 risk reward ratio, and we managed to catch all that. So it's all about having a long-term mindset and being able to handle the short-term losses that you're going to incur. And losses are part of the game, because the market works in terms of probability, and there's a random distribution between wins and losses in any given set of variables that define an age. So if there's one skill that you're supposed to be good at as a trader, if you want to make it in the long run, it's your ability to handle losses. It's your ability to lose, being able to be okay with losing. If you can master that skill, you're going to realize that you're going to be able to make it long term. However, if you're going to react emotionally while taking losses, you're going to find yourself blowing accounts, because you're going to revenge trade, and by revenge trading, you're going to use bigger lot sizes. Eventually, you're just going to blow your whole account. All right. I know most people don't like talking about losses, but here we talk about them because they are part of the game, and you're supposed to expect yourself to actually go through losses. So I hope you found value in this video. If you did, make sure to share this video so that people can actually see. Comment in the comment section, and until next time, goodbye.